good time to bring in Manav Chopra of INDIABULLS Ventures then. Hi Manav, good afternoon. What do you make of the rebound that we are seeing? Will it continue? Can we expect more of upside from current levels?
Yes, it seems quite likely. The prices have already seen a series of decline, and since it has tested some important weekly support levels and most of the oscillators are bouncing from its oversold zone, it's definitely hinting at least for a mean reversion in the near-term perspective. So if we also look at the charts on the weekly perspective, the index has declined by consecutive 5 weeks, and usually such formations leads to at least a 50% retracement rally of its recent decline. So we are currently poising for at least a near-term pullback rally towards the levels of 11,400, 500 sub-levels, only for the factor that the 11,050 and 11,100 if the support levels holds for next couple of trading sessions, this seems to be quite possible. And also looking at the today's recovery, it is more or less forming a piercing pattern on the daily charts, which is nothing but where the bulls are gaining the control. Also the bank nifty has formed some sort of a divergence, at least on the short-term time scale, and most of the PSU stocks are also bouncing from its oversold levels. I think in the near term, maybe in a day or two, we will get some breakout confirmations, but I think it's time that one should avoid going for shorts. But there are some lot of stocks and opportunities at the lower levels where one can take some contrarian bets.
And what about individual stock ideas for this afternoon, Manav?
Yes, my first buy call is on Tata Power. In fact, we have seen the stock to be in a broader sideways corrective band and having monthly and weekly support around the levels of 55-60, and after a recent decline, the stock is now at the support zone of 60 levels. We have seen the stock also seen a good reversal from its intraday lows, and definitely providing a very high risk reward. In such markets, risk reward strategies are the very important key parameter for initiating any positions. For a simple reason, it also provides a very good cushion and a good upside move. So we've seen historically Tata Power, whenever there is a bounce from the levels of 60, usually there is a 12 to 15% upside. So at the current zone, it's a buy with a stop of 55 for an upside target of 70. And my second buy call is on Hindustan Unilever. In fact, the stock has witnessed a series of corrective decline from its recent peak and is also on verge of a breakout of its falling trend line. The prices are also forming a minor higher bottom, which is structurally positive. So I sense in the near term we could see some sort of a fresh momentum coming into this. A stop loss of 1700 for HUL for an upside target of 1830.
Okay, so those are two buy ideas coming from Manav. Let's also bring in Richard Jain of Angel Broking to get his views on the technicals. Richard, a sharp recovery is seen after Nifty very briefly breached the 11,000 mark in the intraday session. What should one do from current levels? Can one take a fresh position on the upside or should wait?
Hi, very good afternoon. Well, if we see today's trading session in the morning, the stock index has formed a support base around 11,000 levels. Now, if I look at some of the positional charts on the weekly charts, a rising trend line support is in the range of 11,940 to 11,010, and exactly in this range we have seen a formation of today's low, and from there the market breadth too has improved compared to what it was in the morning first hour of session. Also, if we see the pullback move which has been seen in the index from the lower levels, it has been supported by a broad market participation, which is an indication of a probability of pullback move getting continued. On the Nifty Bank Index, also we have seen the 200-day, the index came near its 200-day moving average. It was stead above its 200-day moving average, and an up move has been supported by many of the index heavyweights names, whereas the Nifty Midcap Index too has formed a harmonic reversal pattern at today's low. So these are all indications that things are oversold, and we might see a good pullback move in maybe next few trading sessions, and today's low around 11,000 should not be breached immediately for at least until we see this up move towards 11,300. So at current levels or on minor dips, one can look to buy Nifty keeping stop loss below 11,050 and for target around 11,270 to 11,300.
Okay, so look to buy Nifty at current levels with a stop loss of 11,050 and target of 11,300. Richard, that's about Nifty, but what about individual stock ideas for this afternoon?
I have a couple of buy recommendations from the large cap space itself. One is a buy in L&T. The stock is trading around its rising trendline support, and in last 3 trading sessions we have seen this 200 DIM also acting as a good support for the stock. So we are expecting an up move. One can go long on Larsen with stock below 1359, expecting target around 1450. And Kotak Bank is my second recommendations. If you see within the banking space, in last couple of weeks, in spite of the Bank Nifty showing very sharp correction, Kotak Bank has managed to show a time-wise correction, and this the longer-term trend for the stock is still positive. So it was just a time-wise correction within an uptrend. Today the prices of C are indicating a breakout from this consolidation. So there is a we believe that the stock would resume its higher degree uptrend. So one can go long on Kotak Bank. Stop loss I would like to revise it to 1490, because in last 15-20 minutes the prices have shown some good positive momentum. So one can go long at current levels with stop below 1490 for target around 1600.
Okay, so those are some individual bets coming from our technical experts. Just want to highlight the Nifty PSU Banking Index. Remember, that was your top sectoral loser yesterday, down about 5%. So that's recovered quite sharply. And the recovery is coming in for sectors, for stocks which were beaten down so far. So one of them being Nifty PSU Banking Index, and the other is auto as well as metals. Both of them are seeing very, very strong gains. And something like IndusInd Bank, which touched its 52-week low yesterday when markets were weak. So that's bounced back quite sharply. It's your top gainer on Nifty, up about 5.5%. And IOC, which came out with its numbers a while back, the GRMs were better than what the street was expecting, and clearly the stock has reacted positively to the numbers as well. The stock sitting with gains of about 4 to 5%. From the auto pack, you've got Hero MotoCorp up about 4%. The numbers came in yesterday, but I think it was largely factored in, then the numbers will be on the weaker side. Other stocks like Sun Pharma and Tata Steel, JSW Steel are Nifty constituents right now, which are sitting with gains of between 3 to 4%. Let's bring in our next guest on board, Gurmeet Chadda of Complete Circle Consultants, who joins us now. Hi Gurmeet, good afternoon, and thanks a lot for joining. Finally, some bit of relief after breaching the 11,000 mark very briefly in today's session, but does that change anything, because we've lost almost 650 to 700 points in Nifty for the month?
So while Nifty, you're right, Navneet, the Nifty only shows 600-700 points, but the pain is much deeper. I was seeing the BSE small cap index. We are almost at 12,000 levels, what we were in August 2015. So actually 4-year returns of the small cap index is almost flat. I think this week is extremely important from a global perspective as well. Not only do we have the FOMC meet and the outcome, which the market is pricing in a rate cut, I think they'll be more interested in knowing the trajectory, whether this is a one-off or what does the trajectory look like. Also, in terms of the liquidity supply, if you see this quarter, the US Treasury is expected to, the issuances are likely to top $430 billion. Now that's almost 3 times of last quarter. Last quarter was some 160-170 billion, which means that in a yield-hungry world where $14 trillion of debt is negative yielding, this could also suck a lot of global liquidity. So and would have an impact on how the dollar index also moves. So I would be very keen on seeing at what tenure this 400 plus issuance is, how it is spaced out, and what the Fed has to say with that. Because right now we have been correcting when the global liquidity and environment has been not been that bad. In light of what happens, I think would be interesting to see.
Okay, Gurmeet, there is weakness within the set of numbers which are even slightly missing the mark, and talking about some asset quality stress, right? Acts as a case in point here. And the larger point that a lot of people have made is that post these results and the commentary, there will be a shift in preference away from Axis towards ICICI Bank. Would you subscribe to that theory? And if somebody has Axis in the portfolio, would you go so far out as to say that switch at these levels also out of an Axis into an ICICI, or that's too drastic?
So Neeraj, I agree. I think the re-rating for ICICI will probably happen earlier. I think the street was earlier anticipating a re-rating for both these stocks. But Axis, while the core PPOP business performance was good, the retail business, both in terms of assets as well as fee, posted a decent number. But as you rightly pointed out, there were more slippages, and some concern on asset quality. So my sense is while ICICI will get re-rated earlier in light of the improvement it has shown in the the asset quality, also with this CCD and other more stress assets coming up, we'll have to see how much exposure Axis has. My sense is they do have some exposure there as well. So I don't advise the switch really, Neeraj, but incrementally if I were to add today in banks, I would prefer adding more more to ICICI from a near-term perspective. But I'm very confident of the leadership team in Axis. I think the transition there will be probably more medium to long term, but it still is a decent play. In fact, one can use these dips to maybe gradually nimble into it. Also, some of the mid-sized banks, look at, for example, a Karur Vyasya Bank, 5,000-6,000 crores of market cap, 70,000-80,000 crores of balance sheet. AU Finance had a decent quarter. Also, RBL post the correction, may not be a bad bet to look at. So, I think the entire space one has to take a combination of this mid-sized banks and large, but ICICI will remain the topic. I agree with you there.
Okay. Gurmeet, the other part is this whole talk about the potential SL Group deal happening very, very shortly. Now, maybe the market has a whiff of the pricing not being quite what it anticipated, as a result of which both Z and Dish are down today. But there is a larger ecosystem out there that benefits if indeed there is a lucrative deal that happens. My question to you is precisely that. From your memory, if you can tell us what all would benefit if indeed, in whichever shape and form and price, an SL Group deal takes shape and form.
So, Neeraj, actually, there are two asset classes which will benefit. One is the debt asset class, because you have, let's say, Birla funds where the exposure in some of these entities is as high as about 18% in their dynamic bond fund and medium-term fund, and probably a little lesser in the credit risk fund. So there's one side there where they've agreed to hold the standstill agreement, and to a lesser extent in some of the other MCs, but Birla being the major one. Franklin Reliance obviously exercising their the collateral and offloading it when the prices are high. The other segment obviously I think is the stock itself. So my view is that the news in the market is, and it should be out, they said they'll make an announcement, is they have more preference towards the financial deal where the Goenkas, the family remains in the business, versus a Comcast-led consortium which involves a management change. The deal apparently is a premium of about 20% to the average 3 to 6 month price, that's why the stock actually crossed 400 plus, and now obviously there are some numbers again. My sense is that a few banks will obviously benefit in terms of their exposure. Largely, I think the PSU banks. I don't have the numbers handy right now. I did have that sheet at some point of time, but looks like BOB and some of the others. So my sense is it's a good tactical play. I think the asset is good. I've been saying that one can use these dips to accumulate. They made a 500 crore PAT despite the tough environment. The subscription revenue was pretty decent. Z5 continues to do very well. I'm a subscriber of Z5. I think the content there is quite exciting from an Indian audience perspective, and I think it's a good asset. One can look at tactically whenever you see any dips in it, and once you have this entire thing behind, the debt issue behind, eventually it's also available at a pretty reasonable valuations.
Okay, we'll be watching out if there is any sort of announcement which comes by or not. But very quickly, Gurmeet, I know the creditors will be benefited in case anything comes out. But what about the shareholders, minority shareholders? Do you see anything for them? Will there be any open offer?
Looks like, Namit, I mean, as I said, we'll have to wait for the event to pan out. They have been reassuring the street for almost now 6-8 weeks. Every week saying that we've got the binding offer, one has come, the other. So you'll have to see what exactly the offer is. It looks like the way the share price has reacted, it looks like somebody coming in more from a financial perspective, not as a change of management thing is what looks like looking at the share price response. And I think the market tends to read these things far more smartly than we do. So let's wait for the announcement to come. My sense is everything should be taken care of. I don't see any issues, any issue from minority shareholder point.
Okay, let's hope everyone's taken care of and the deal is announced by Z. But meanwhile, let's just address some more earnings, though the markets are holding steady right now in the green, 11,115 for Nifty. It was a steady quarter for Repro India, with the operational performance being on strong footing. The net profit grew 20%, while the margins saw an expansion compared to last year. Well, the company is also looking to merge its print business with itself. Let's discuss the quarter gone by with Pramod Khera, the Executive Director of the company, who is right here with us in the studios. Hi, sir. Good afternoon, and thanks a lot for coming by. First, just a highlight for the quarter gone by. What stood out for Repro?
Well, we are focusing on a growing up POD business, which we are using to print one book at a time and sell over various e-commerce channels. So that has shown a steady growth, and that has grown almost by 20% compared to last quarter. So that's as per the strategy that we have had. And so overall, the quarter has been as per expectations.
And what's the current revenue share from that POD business that you're trying to grow at 20%?
So it's around 32 crores out of the total turnover of 107 crores.
And what is the expectation going ahead, this 32 crore? Can it grow to 50, 60 crores?
Well, if you look at the entire year, last year, for example, we did 400 crores of turnover. 300 crores was from the traditional print business, and around 110 crores was from the new business, which is the e-retail business. And over a period of time, next couple of years, we expect this to overtake the traditional business and contribute more than 50% to the top line of the company.
Mr. Khera, good afternoon. Firstly, the quarter, the operational performance seems a bit heartening, correct me if I'm wrong, but 12.1% versus 10.8%.
That's right.
What helped in the quarter?
Well, our e-retail business, last couple of quarters, it has broken even. And it started contributing to the bottom line of the company. Whereas the print business remains steady. Earlier, the e-retail business was negative in the bottom line. So now that it's become positive, it will start contributing more and more to the bottom line of the company. So that's what we are seeing quarter on quarter.
You would reckon that this 12% odd EBITDA margins could stay steady, or would you reckon that with the higher contribution, actually e-retail is right now not a high margin business, so would you believe that the margins could stay steady at this 12% mark for the rest of the year?
No, in fact it would improve, because our strategy is to reduce the sales from stocks that we pick up with, right? And on POD, margins are better than the traditional print business.
Okay, so how would you believe, I mean, I don't know if this business is seasonal, but how would you believe the rest of the year is shaping up? If indeed the contribution, I heard you mention that you did 110 crores in the book on delivery business in FY19, and you've done 32 crores already in FY20. So how do you expect the top line performance to be like for the rest of the 3 quarters?
Well, the two prongs on which we expect the turnover to increase as for the e-retail business is concerned. One is more content acquisition. So we are going quite aggressive in signing up more publishers and getting more titles into a content repository, which results in sales. And second is our Delhi plant is starting from August. And then we have a plant coming up in the south in Bangalore, which will happen by end of this financial year. Now these two plants will definitely contribute again to a revenue growth, because today, not being present in those territories, we're losing out sales to competitors.
Okay, so do you have an annual run rate set target in your mind internally that you can share?
Well, we do have our targets and plans, but we don't give a forward-looking statement.
Okay.
We don't give guidance.
Just one follow-up though. You mentioned the publishers that you're signing up. Any large publisher that has come on board after the Ingram deal that you deal, I believe, about 15-18 months ago? Yeah,
so we most of the large publishers in the country now are on board. Whether you look at McGraw-Hill, you look at Oxford, you look at Cambridge, also domestic publishers like Rupa and Jaico, etc. And so the attempt now is to get more and more of the titles with us, and because many of these publishers have a huge catalog base which is not being sold by the traditional distributors. Now, many of these titles are out of print or they're backlist, etc. So we can sell everything because we just have to list them and get the files. So that's our attempt, and we see that a lot of the lost sales which are there today happening, those sales would come to us.
Okay. What's the status with regard to the merger which has been proposed for your print business of Repro Books to Repro India?
Yeah, so it's we have just informed the stock exchange about that. We need to take permissions from the government and from the shareholders. But once that is done, it will be effective from 1st April.
1st April of next financial year.
This financial year.
Okay, it's going to be back-ended. All right. And you said your expansion plans are underway in cities like Bangalore and Delhi. What sort of investment are you putting in there?
Well, both the plans put together, we're investing around 30 crores.
And how are you financing that?
It's already funded because we raised some equity earlier through preferential allotment, and the rest is through borrowings, etc., plus internal accruals.
Okay. Just with regard to your standalone print business, there's a shift from print to digital now, we all have been talking about. Are you seeing any sort of trends? Because of course you mentioned that you want to increase more of your digital sales as well. So what's the future for print going ahead? Do you expect a sharp cut in the revenues that right now you're getting or garnering from your print side of the business?
See, the India book market is huge, $6 billion. So a lot of printing is required, and the printing industry is highly unorganized. We are one of the largest printers for books, and today, since we have a fixed capacity, we are very selective in taking up business. So I don't think our business is going to get affected, but however, there is definitely a shift happening from the traditional printing, which is offset, to digital. And because digital makes it possible to print shorter runs, and because today if you print large runs, then the problems of inventory, etc. So more and more printing is moving to digital printing, but offset printing is not going to disappear, because there is going to be requirement of large runs of 1 lakh copies, 50,000 copies, 10,000 copies of textbooks, of books like Chetan Bhagat, etc. So that will happen through offset.
You still, well, last question from mine, you still stick to that guidance or this aim of having 10% of the online book market by 2020? That's 800 crores, I reckon. By 2020, you are currently at a run rate of, what, 32 crores per quarter, which makes it about 150 crores at best for the year. 800 crores is a stiff number. Yeah, because see, it's not just taking a larger market share, it's also the online sales are increasing as internet penetration is increasing. More and more people are now comfortable buying online. So today only 3% of the books in India are being sold online, whereas in the US it's 50%. So India is also moving in that direction. It might not reach 50%, but maybe 5%, 10%, 15% in the next 2 or 3 years.
What's the margin differential when you sell online or otherwise, the other platform?
Well, the margin, see, the publishers give distribution, a discount to the supply chain, right? Now here the supply chain is eliminated, it's being sold online. So most of the discounts then get passed on to the customer. That's why when you go online, you can buy a book at 30% discount, whereas in a bookshop it's at MRP. Okay. So as far as sellers are concerned, the margins still remain the same. Okay.
What about the target, sorry, you were saying?
Yeah, I mean, if the market grows the way it's been forecasted by AC Nielsen, 19% per annum, and if the shift to online happens, which also we are seeing year on year, definitely the online market would reach around 8,000 crores in the next 3 to 5 years.
Okay, 3 to 5 years.
Yeah.
Okay, fair call. Good having you, Mr. Khera. Thank you so much for joining us today, and all the best with the quarters ahead.
Thank you.
It's Repro India, confident of the numbers looking good ahead as well. This quarter has not been bad. The stock at 516 currently. Let's wait and watch what happens there. The markets though have cooled off a little bit, you would have to say. The Nifty Bank is now about 0.25% in the red. So that index is just slightly off from the highs of the day. Keep that at the back of your mind. Just before we take that break though, a couple of stocks, or maybe just a quick chart check on the Nifty Bank. Manav, while you might be bullish or neutral on the index, Nifty, what about the Nifty Bank that's got some volatile components these days? How would you trade this one?
See, if you're looking at the important intraday support for the Nifty Bank, it has again, after its recent high, it has again came back to its important intraday support of 28,800. So the clusters of 28,800 and 28,700 on the intraday basis is very important. So I believe if we are closing above these levels, there could be a possibility of a pullback rally for the markets going forward. Nevertheless, on the upside, we are expecting this pullback at least in a very short-term perspective towards the levels of 29,200. So as long as these support levels are holding, I sense this pullback rally to hold on, and a lot of PSU banks, Neeraj, are at the deep oversold levels. Looking at the charts of of its recent decline that we've seen in SBI or even in BOB, they are at deep oversold levels, and they are heavyweights of the PSU. So I believe they are finding some near-term bottom in place, and the current levels. If we are looking at the charts perspective, also we are seeing some sort of a divergence, which could definitely add some more throttle, at least in the Bank Nifty. So once if the Bank Nifty manages and sustains above the 28,900 levels, you could see this good momentum coming on the upside.
Okay, just Ruchit, just one more question, since you're sticking to banks. It might be a risky trade, but just purely looking at the charts, would you take a trade in Yes Bank?
Not really, Neeraj, because if you look at historical data, the recent past as well, the stock has clearly formed a low top, low bottom structure, and in spite of the consolidation which we have seen in the last few trading sessions, the trend still continues to remain negative. So I think to go long on Yes Bank is a very high risk trade. In case if one has to do any kind of buying in beaten down banking names, then rather than Yes Bank, I would prefer going long on IndusInd Bank, because if you see, then in last 1.5 months, levels around 1350 has acted as a very strong support. Today the stock did give a gap down opening below that 1350 level, but again within few minutes itself we saw prices showing a sharp bounce from 1350, and that too with good volumes. So I think till this 1350 is intact on a closing basis, IndusInd Bank probably has higher chances of continuing this up move towards 1500, 1550 kind of range. So if we look at the beaten down banking names, then rather than going long on Yes Bank, I would prefer going long on IndusInd AR.
Okay, let's slip into a quick break on the note that banks, well, they're playing a bit of a seesaw, but in the green nevertheless. We take a break, come back, get you the Fab 4 stocks of the day at 3:15. We'll tell you what dealing rooms are recommending in the session today, and then some closing strategies from both our technical experts. Gurmeet Chadda, of course, stays on as well. Stay tuned to Bloomberg Quint Live.
Welcome back. You're still watching Countdown with us. Just 25 minutes to go for markets to shut shop, and we have seen recovery from the lower levels of the day. Nifty is still maintaining its gains and trading above the mark of 11,100, 27 points higher for Nifty and about 56 to 60 points higher for the Bank Nifty. And the sectors which were beaten down from the likes of PSU, autos, metals, all of them have bounced back in today's trade, barring the Nifty Media Index because of the selling pressure which has been seen from Dish TV, which reported weak set of numbers, and also Z Entertainment. And in anticipation, let's see if the deal gets announced today or not. But Dish TV is recovered from the low point of the day. Z is still sitting with cuts of about 5%. Very quickly, I just want to pull up what the globe is doing. The European market indices, which saw selling pressure in yesterday's trade. The DAX was down about 2%, but today has been a mixed session. CAC and DAX are just about trading in the positive territory, whereas cuts seen for FTSE 100, which is down about 30 points. Quickly pull up the Dow futures as well, up about 80 points ahead of that crucial announcement. Let's see what the FOMC puts out today. Market anticipating, or rather expecting, a 25 basis point rate cut from Fed. But back home, we've seen recovery. Let's see which are the Fab 4 stocks which Mishika Parekh is tracking today. Hi, Mishika. Good afternoon.
Good afternoon, Navneet. The first stock on my list of Fab 4 today is Gujarat Gas. The stock has gained the most in 6 months on the back of very good quarterly numbers. CLSA has hiked target price to 210 from 195 rupees and says that soft LNG prices should be a tailwind in 2019. Also, earnings can be expected to double in the next 2 years. Second stock on my list is JSW Steel. The stock has recovered after a 2-day sell-off, and the company stated that it has been declared as the preferred bidder for another 3 iron ore mines. Third on my list is Quest Corp. The stock has gained as much as 8.5% and it snaps out of its 2-day losing streak. Last on my list is Lemon Tree Hotels. The stock gains ahead of results tomorrow and volumes are trading at 16 times its 20-day average. Back to you, Navneet.
Thanks a lot, Mishika, for telling us those Fab4 stocks of the day. But pull up Apollo Tyres as well, which has moved higher after it reported its numbers an hour back. The stock sitting with gains of about 5%. Remember, these are all your beaten down counters. It's rebounded from its 52-week low. And one of the notes I'm reading, it does say that the numbers have been marginally ahead what the street was expecting. And the surprise actually came in on the gross margin front, where the gross margins expanded 150 basis point on QOQ basis amidst elevated commodity prices. But still, let's see, the gains, however, were limited, tracking the higher other overheads which were seen during the quarter. Margins, as you can see on the screen, at about 10.9 versus 12.5. Coming here, Gurmeet, on the tire makers, Apollo Tyres, CA, the entire space is beaten down, but looking at the valuations too, both Apollo and CA are trading around 10 to 11 times its one-year forward earnings. Is that a good bet at current levels?
See, while I agree with you, the prices are indeed tempting, Navneet, but I think in the ancillary space, I think one should wait out for maybe another month or so and see if there is a pickup in H2. I think yesterday's commentary by Hero expecting H2 to be better seemed to be a little encouraging, which is probably reflected in the price. I would still go with the time-tested large institutions, which I think they have the ability. I think in ancillary space, it's better off. You're better off looking at players like Minda and others, which are more into more content per vehicle space. As you see more value addition happening in each model, more value for money coming in, whether those are sensors or ABS or airbags or some of the infotainment systems they have. Also, my sense is, and that something around auto from a policy announcement is due. I think the feedback has gone, and my conversation with some of the clients are former bureaucrats tell me that there is a serious consideration on some kind of a package for auto, which probably will immediately impact OEMs more. So I would restrict myself into maybe picking up a Maruti, a Bajaj Auto on a dip. Maruti now has an Ertiga which is compliant with the BS6. The upcoming product portfolio seems to be good. And on ancillary space, I'll be better off with something like a Minda or a Sundaram Fastener for now. But we'll go a little slow, maybe a month more, from a timing perspective.
Some pain points today. Aside of course, Coffee Day and Sickle. Sadbhav Engineering is down about 13.5%. GVK Infra is now down sub 5 rupees. For all those who thought such things don't happen, they are happening. This is the operator of a couple of premier airports in India, but currently down less than 5 rupees. And today, Welspun India is down sub 50 rupees, so watch out for that stock as well. PVR is back to 1500, so there are those 3 or 4 names which are looking slightly wobbly in the session. This exhibition space, Gurmeet, would you use these dips to buy into a PVR or an Inox?
See, Neeraj, if you see PVR's run up this year, if last 6 months it ran up almost 50% before hitting that 1800 level, and now with that, so I think my view is, I think, and I firmly believe that both OTT and cinema experience will coexist. Our per screen, and I'm giving a more long-term fundamental view, our per screen penetration is amongst the lowest in the world. PVR is also, and Inox included, are coming up with very different viewer formats. Whether those are playhouse for kids, we have seen on the higher end, which is the director class and others. So there are various viewer formats coming which will aid the margins. The overall net box office collections, and mind you, these numbers of PVR also had the acquisition of the South-based firm, so numbers are not really comparable on a Q-on-Q basis. So my sense is, with more screens getting added, we still have more than 50% single screens in most part of the country, which are gradually getting converted. So this market is getting organized. all three revenue streams, advertisement, F&B, box office collections, to me will do well. And I think they will coexist with OTT. So I will be a buyer on dips, but we have to be mindful of the fact that it did run up 50% in first 6 months. So maybe gradually, buying them on dips would be a better idea.
Okay, maybe buy on dips might be a better idea. Not currently. By the way, what's flashing up, and by that I mean stocks which were not quite doing well recently, but today are moving up, included TVS Motors, which is up 7%. Delta Corp is up almost 6.7%, so really smart move there for that one. And Vodafone Idea, after 2 days of carnage, literal carnage, has come back up about 4 or 5% in trade. So do watch out for this one too. Actually, a couple of those stocks, so liquid names, TVS Motors and Delta Corp, to each of our technical experts. Manav, to you on Delta Corp.
See, looking at the charts for Delta, we have already seen prices breach the weekly support, which happened few months back, which was backed by some negative news which was floating into the stock. Nevertheless, we have seen the stock enter into a bearish territory so far. So, as long as the stock doesn't breach and exceed and close above 165 levels, I sense, this could just be a short-term pullback rally. And for a sustained move, the stock has to close above 165. So for a near-term perspective, I will still raise some question when it comes to the structure of this stock and at the current zone. So we need some more confirmation into this. As of now, there has been a good volume on the daily charts, but I think for any good move, I think a close above 165 on weekly closing basis would ideally be would give that throttle, and in that case we could see some rally towards 185, 190.
Okay, sharp uptick there. Watch out for Delta Corp. TVS Motors, Ruchit.
It has been one of the underperformer within the two-wheeler space, but today's up move resembles formation of a bullish engulfing pattern on the daily chart. And usually, whenever such patterns are formed after a sharp correction, there tend to be a pullback moves. Also, if you look at derivatives data, then last two series there have been formation of significant short positions in TVS Motors. So due to this reversal pattern today, we might see some good short covering move in this stock, and we could see the stock heading higher towards 390 to 400 range. However, that would not be a change in the higher degree trend. The higher degree trend would still continue to remain negative till we get a higher top, high bottom structure. But yes, within a downtrend, at least one can expect a pullback move towards 390 to 395 in next few days.
Okay, that's TVS Motors. Just want to mark a few more stocks. Tech Mahindra, which touched its 52-week low. The numbers were weak on all parameters. That's recovered from the low point of the day, and it's just about to go into the positive territory, right now down about 0.5%. The other one, which is an earnings reaction, is Cholamandalam Investment. That's gone up quite sharply in today's trade. In fact, it's one of the top gainers in the futures and options market, up about 7% right now. If possible, if we could just pull up the futures as well and check if there are any long positions which came in at lower levels, because the stock did open on a negative note, 6.5% higher when it comes to the futures side. Very quickly, Richard, on the charts, Cholamandalam Investment surging 6 to 6.5%. Would you take a bet here?
The volumes are good on the daily chart. The only thing is, for a fresh bet, the stop loss is very far because the prices have already rallied by more than 6.5% today. So I would suggest if any existing long positions are there, then they could continue to hold on for target around 271 in next 1 or 2 trading sessions, but not advisable fresh longs.
Okay, not advising taking any fresh longs at current levels for Cholamandalam. Gurmeet, there has been a sharp correction, as you've already mentioned in your opening remarks, across the board, and primarily for the stocks in the broader markets. Are you also seeing any signs of sector rotation now? Where will the money flow in? Because we've seen a marginal bounce back so far for a couple of these pharma companies.
It looks unlikely for me now. I think the buying probably whatever little I track at a dealer room and what clients are buying, what family offices and I also speak to a lot of fund managers on the MF side, still seems to be concentrated. While there is a concerted effort being made to seek STPs in small and mid cap portfolios, we also had some funds which were value theme funds like the India Opportunity Fund and some of the others, which did talk about the problem today is this value is being the intrinsic value concept has become an oxymoron. I mean, whether those are debt markets or equity markets, you see Greece 10-year being lesser than US 10-year. So that tells you even debt markets, I don't know which way the world is headed. I mean, the price correction after 70-80%, if there are governance issues. So I think that concept is taken a bit of a knock, and I think it will take a little while before the confidence comes back, where you really start seeing there is value. I agree with you in pharma and some of the construction names and some of the PSU banks. But I think the confidence will take a little while. In fact, I think the flows of MF have to be watched very, very, very closely. July hasn't been a great month. There have been some early terminations on SIPs. And if markets don't improve and 3-year, 5-year SIP returns are negative, the flows which are still keeping some of these mid caps and small cap funds alive can create some issue. So those liquidity has to be watched out very closely as far as the domestic liquidity is concerned.
Okay, some news bits on your screen. Okay, I think you've just taken it off, but I think the number of 22,000 crores for the nutrient-based subsidy, the cabinet has approved that. This is not new. The government gives it every year. There was talk of fixing the nutrient-based subsidy rate for urea in order to promote the balanced use of fertilizer and bring in efficiency in the industry. This is something that a lot of people were tinkering with. Remember, the NBS program was launched way back in 2010. It probably might benefit some companies. We'll try and figure that out. But I think this is not news that is out of the ordinary. Happens every time and might just get some of the fertilizer stocks excited in trade. Gurmeet, a routine annual event, I reckon you would make an investment call based on this.
No, not really, Neeraj. One can maybe look at some of the agrochemical names in this space, as I think the thrust on agriculture and focus on welfare schemes will continue. I mean, there are few. I think UPL, despite all the headwinds, looks better. May not be related to what the announcement has come, and maybe PI Industries, which has a nice combination of CRAMS and specialty business as well as agrochem. So maybe those are the two bits we have in our watch list, but nothing really to do with this announcement.
By the way, keep in mind UPL and etc. come out with numbers, but I just want to pull up the stock price of Godrej Industries. There's a sharp uptick there in the last 30, 45, even MRPL. Both of these names, just a big blip up for both of these stocks, Godrej Industries as well as MRPL. The stock is up about 11.5% MRPL. And look at that sharp uptick there on both of these stocks. Don't quite know the reasons, I doubt. I mean, no connection to an announcement that has just come, maybe some other announcements. But yeah, both of these stocks, just a really, really sharp uptick that has happened. In addition to these, of course, there is traction in Magma FinCorp, for example. That is moving up. Johnson Hitachi's moved up. Mahindra Holidays has moved up. Reliance Infra has moved up. So a clutch of 4-5 names, all of which having some very sharp up moves. Some of them fairly liquid as well, by the way, but moving up. Anything out of these names, Ruchit, that stands out for you? Some sharp moves here.
I think amongst the liquid names, Godrej Industries certainly seem to have formed a good support around 440 kind of level. Although today in intraday it was breached in the morning, but the kind of volumes have been seen in last 15-20 minutes. I think this stock could give a up move in short term. Difficult to time the entry in this stock, because now the stop loss would be quite far, which would be around 440. So in case if there is any dip, the average closing might be lower, because the up move has been seen after 3 o'clock. So if we get any dips to around 465, then one can take a long trade with stop loss below 445.
Okay, that's a sharp move on Godrej Industries. Remember, consumer comes out with the numbers tomorrow. We'll wait and watch how the numbers pan out. But as of now, the move is quite sharp that you can see on the screen. ICICI Lombard General Insurance, that too has seen a very sharp move today. It's up about 5% in trade. Before we get a fundamental view on these insurance companies, I just want to take closing strategies from our technical experts. Manav, let me come to you. Any BTST or any STBT for tomorrow's trade?
Yes, at the current levels, if you're looking, the IT packs is showing some sort of a resilience in the past couple of trading session, and my one buy call would be on HCL Technology, which is a BTST. If we see, the prices have managed to exceed its recent 4 to 5 trading sessions highs and is likely to close above it, and is also breaking over short-term averages. The volumes are also confirming. I sense in the near term a very good risk-reward entry for HCL Technologies on the lower side. one can keep a stop loss of 1015 and can expect an upside target of 1065.
Okay, HCL Technologies has been bucking the trend, at least yesterday also markets were down and we did see some bit of positive moves here. Richard, your closing strategy would be?
Recommend option trade for BTST. Nifty tomorrow's expiry 11,100 call option can be bought here. We have seen that today even the market breadth from the lower levels have turned positive. So we expect some positive move in tomorrow's trading session as well. So 11,100 for tomorrow's expiry is quoting around 40 rupees now. One can go long on that with stop loss below 11 rupees and expect target around 80 rupees tomorrow.
Okay, so Richard's advising to buy the 11,100 call of Nifty for tomorrow's expiry. Tomorrow is Thursday, so you'll have the weekly options expiry. Gurmeet, wanted to take your view on the insurance space. So far, we've been talking about taking refuge into quality companies, HDFC Bank, HDFC or Bajaj of the world. But is this also a space where one can look at, because it's still under-penetrated? We've been talking about it, and of late, a lot of market experts who've been coming on our shows have been advising to buy insurance companies.
Definitely, both life and general. If you see the HDFC Life results, if you see the VNB numbers, I think they exceeded the expectations. I think the non-participatory products, which are the traditional products, I think are gaining traction. There's a lot of product innovation happening, Namit, with you. So I think with SEBI clamping down on expense ratios for mutual fund, with upfront fees getting reduced, the shift of the bank has moved towards more towards insurance. It's reflected in the sales of, even if you see the ICICI Bank numbers, the third party had a bit of if you see the breakup, the MF distribution fee was down, but the insurance numbers were up. They are obviously, they offer high margins first year. And as the mix improves, they also have versus ULIP, there's a lesser risk. ULIPs carry more market risk. The investment income can keep fluctuating. The traditional products only have balance sheet risk and a reinvestment risk. But if you have a well diversified portfolio, that is taken care of. Also, the growth of online sales is both increasing the persistency ratio as well as bringing down the commission part as far as the online numbers go. So positive on life. Even in general insurance, I like Lombard. I think the new MISP guidelines, if you see, are placing some underwriting discipline and uniformity in dealer commissions. The third party pool will improve the profitability. If you see, their risk management processes are far better. In natural catastrophic events, their share is sub 6%. Versus an 8%, which is industry standard. We saw that with Bajaj Allianz numbers getting impacted due to higher claims in the general insurance side. Even in reinsurance, they only do A and above, versus the regulatory requirement where you're allowed to basically do BBB minus and above. Also, the crop insurance seems to be a very, very big focus area. The government has recently changed the guidelines to a model which is now on a risk transfer basis, which is basically in very layman terms is percentage coverage of the field or the crop, which means your ticket size will grow up. And this is a one sunrise subsector in the insurance which can give good growth. So overall, and you're right. I don't want to really speak on the penetration bit. We know it's all low. So both life and general, ICICI in particular looks very good.
Okay, well, both life and general look good to Gurmeet Chadda. Gurmeet, before we thank you, just wondering, would you by any chance even contemplate buying into Vodafone Idea at 6.5?
Not at all.
No, the risk reward is not in favor.
The bear market always teaches you new lessons, but the old lessons are there. Leverage excessive debt is a sure recipe for disaster.
Yeah, well, maybe I was wondering if there's a lesson out there which says that yes, there is debt, but if the pain is in the price, then go out and buy. I'm not suggesting the pain is in the price, by the way. I'm just asking you.
Yeah.
Okay, Gurmeet.
Airtel looks a better bet. Yeah.
Okay, Airtel looks a better bet. Great. Gurmeet, good having you as always. Thanks much for taking the time out and look forward to having more often on the forum. That's Gurmeet Chadda. It was a pleasure having him on the show. Just before we wrap up, can't not talk about the top gainer and the top loser. It's a deal day, so maybe difficult to ask our guests to take a call on Z. So I'll leave that out. I'll revert to the second top worst performer, and that's Axis Bank, which is at 675. Manav, we spoke about this earlier, but if somebody's short on Axis, would you carry home the short positions?
No, I wouldn't carry, for a simple reason. The prices have already reached its lower threshold limit, and it's nearing into its important weekly and monthly support zone. I sense on the near-term perspective, there is a likely chance the stock may just find a sideways corrective decline, but anybody who's holding short position, I think it's good time to at least book your profits. And on the lower side, I believe that 655 and 665 are very important cushion for the prices. As if these prices hold on, there is a likely chance that in fact the prices would rebound from the current levels and could see a near-term bounce at least towards the levels of 720.25. The overall structurally the stock trend has been quite bullish. Yes, the weekly scale has turned negative, but at the current point, it's good time to at least exit your shorts.
Okay. And Ruchit, just very quickly, if somebody was long on TVS, would you recommend carrying home the long positions?
Yes, I think as we discussed earlier, so the stock price is forming a bullish engulfing pattern on the daily chart. So we expect this pullback move to continue at least up to its 20 days moving average, which is around 390, 395. So one can carry on the longs, and around 390, 395, one can again review to book profits.
All right, gentlemen, stay on. We'll take in closing thoughts from you, but here's how the markets are shutting shop. In the green, which is a bit surprised today, we started off in the red and ending in the green. It's not something that we're used to seeing the last few days. So maybe the bulls might be breathing a sigh of relief, really. The mid caps and the small caps, those indices will also come up on your screen. In the green, and the market would be interesting. Navneet will speak more about this, but 1.33% is not a bad performance at all, considering what we've seen in the last few days. I'm very interested in seeing the FI number today. The last 2 days, the FI selling was not as severe. Let's see what the number looks like in today's session. But let me sum up the large caps first and what's happening here. IndusInd Bank, 5.5%, so good show. Yes Bank, 4.5%. Some strength in Tata Steel, but the two-wheeler and the auto companies, so Hero MotoCorp up about 3.5%. Some of the others too are in the green, which is not a bad sign in the auto space. Sun Pharma, UPL, Grasim, JSW Steel are amongst the other companies which are in the top 10 gainers list. But autos, remember, have done reasonably well today. What's not done well? Results reaction on Axis Bank, a possible pre-deal movement in Z. Bharti about 2.5% lower, Titan 2.5%. Reliance Industries continues to grind lower. One reason why the markets have been under a bit of check is Reliance the last few days. And then deep down, Maruti Suzuki, while autos may have looked slightly okay, Maruti still continues to remain under pressure. Remember, the monthly sales numbers come out tomorrow, and those would be very, very crucial from an auto and auto component perspective. But if large caps have done okay, mid caps have done really well. Navneet, what's standing out?
Well, Neeraj, majority of the stocks which went up today were also the ones which were trading at 52-week lows. So let's see whether today's bounce was a dead cat bounce. We need to see some bit of incremental gains coming in the coming days. But first up is Apollo Tyres. They came out with the numbers today. The numbers looked better than what the street was expecting, especially on the gross margins front, which expanded sequentially. And you did see the stock reacting positively post the numbers. This one, by the way, too touched its 52-week low, and post the numbers, you saw the gains coming by. The other one is Apex Frozen Food. This one also bounced from its 52-week low today. 10 to 11% gains seen here. The stock's looking to close around the level of 240. Tejas Network, which was falling after its numbers, but in the last few days we've seen some bit of recovery. However, markets were weak yesterday, so the stock also fell 9%. But today it's closing. I think 10% is the upper circuit for the day for Tejas Network. So 90.9 is where it's closing. And United Spirits also saw some buying momentum. The stock's closing with gains of about 4.5%. Around the levels of 593. Cholamandalam Investment, they came out with the numbers yesterday, and a strong move seen in today's trade. The stock's closing at high point of the day, over 6%, 258.6. A couple of these pharma companies bounced back. So you had Aurobindo Pharma featuring among them. The stock's closing with gains of 3%. And we were talking to Gurmeet about the insurance company. You had ICICI Lombard in that pack, which went up about 4 to 4.5%. On the losing side, Coffee Day Enterprises and Sikil Logistics, second straight day of lower circuit for both these stocks after the news came in of their co-founder VG Siddhartha, whose body was found today. So 20% shaved off for both these stocks today as well. PVR has been reacting negatively post its numbers, which were weak. Short positions continue to build up on the future side. The stock's closing with cuts of 4%. Biocon from the pharma pack was weak, in fact, today. So that stock seen cuts of about 3.2%. And lastly, Dish TV, which came out with the numbers which were weak, and the stock's closing with cuts of 4.5%. But we did see some bit of recovery from the lower point of the day. And as Neeraj was highlighting, Z as well as Dish TV will be in focus in case there is any announcement which comes in the evening.
Yeah, but pull up the turnover and let's see how the volumes have been like. The market breadth, I'm guessing, would have been positive, and we'll get to that too. 15 lakh crores on the F&O side, and the cash market volumes too very high. So today with above average volumes for sure.
Yes, and cash average has been somewhere between 30 to 31, so it's been above. And F&O, I think one day before the weekly options expiry, tends to pick up.
Yeah, and the market breadth should be positive, but okay. Maybe trying to veer towards the positive side. It's surprising because the mid-cap index was up 1.5%. I would have thought that it would have been big time in the green, but clearly not the case.
Not the case for the entire listed universe, actually, on the National Stock Exchange. Lastly, I just want to pull up the contributors list among the Nifty constituents. That's going to give you a picture what actually contributed to the gain. So IndusInd Bank, TCS, Kotak Mahindra Bank are a couple of stocks which were up and about, but dragging the index lower was Axis Bank and your heavyweight Reliance Industries. The stock continues to trade below its 200-day moving average. Watch out for Bharti Airtel. This one comes out with its numbers tomorrow.
Yep, let's wait and watch what happens. Final thoughts from our experts. Manav, to you first. On the basis of what we've done today, do you expect that if the Fed doesn't play spoil sport and if the globe is supportive, we have a chance of moving back above those 200-day moving averages for the Nifty?
See, when we're looking at the world market charts, yes, definitely they are at a very different range. Looking at the chart of Dow Jones, S&P 500 and Nasdaq, they have seen a very good pullback rally from its recent lows and it's at all-time highs. We have been underperforming lately and majorly because of some post-budget events. Looking at the charts perspective to the event lined up, I believe we are in the oversold levels. A lot of things have already been discounted, negative events have taken place into the picture. The important key triggers for the bulls on the upside would be 11,200 Neeraj. So there could be a lot of choppiness in the market as long as we are below 11,200. Once if we exceed and break above that, I believe that could lead to some initial pullback rallies which could open the gates towards 11,400, 500. But we need to see some sort of a closing above 11,200. A lot of stocks are in deep oversold levels. We have seen initial signals of short covering which has happened today, but most importantly, we need to see some sort of a follow-on move, which we need some closing above to certain levels. So as of now, we are definitely not being short in the market at the current levels. Now we are recommending for fresh shorts, but we are very much game and ready to take some long positions. And on the index level, like I mentioned, 11,200 closing and above would be quite bullish for the markets, at least in the near term.
Okay, Ruchit, what would your thoughts be?
I think yes, markets have definitely given signs of a pullback move, at least from its support of 11,000, what we have seen today. And one good thing is that if you look at the Nifty Midcap Index, then today's low in the Nifty Midcap Index marks around the potential reversal zone of a harmonic pattern, and the index has also formed a bullish candlestick pattern on the daily chart. So one can expect some pullback move in many of the beaten down mid-cap names. So yes, from next few days perspective, now having said that, this would not be a reversal of the trend which we have been seeing post-budget. The trend would continue to remain negative until we get a high top, high bottom structure. But yes, within a downtrend, one can expect a relief rally in next few trading sessions.
Okay, gentlemen, we'll leave it at that note. Ruchit as well as Manav, appreciate you joining us today and taking us through the technical views on the markets. Well, with that, it's a wrap on this edition of Countdown. Thanks a lot for watching. Goodbye from Neeraj, my side, and the entire team who put this show together. Stay tuned to Bloomberg Quint for more news and updates.